Very simple question. Do you know who's going to make the decision to give the $20 billion of ETH back? Because there is no representation as to when you'll be able to unstake ETH. It's not clear who makes the decision.
Michael Saylor is the founder of MicroStrategy, an investment management firm that holds one of the largest stock of Bitcoins. He's a Bitcoin maximalist. And in today's video, he reveals why he's very critical of Ethereum, the world's second largest cryptocurrency by market capitalization. His concerns are substantiated by the recent fears that FTX's failure would spur regulations that could list cryptocurrencies such as Ethereum as securities. If this happens, it would set the crypto token back and its investors may dump the coin. So, is there a reason to fear this fate will befall Ethereum? Let's listen to the arguments Michael Saylor presents.
The problem is Ethereum is a security. Look, I don't mean to be mean about it, but it's pretty evident. Vitalik is the CEO of Ethereum. There is a 10-year roadmap with 160 blocks. One of the little blocks in the roadmap says elect secret leader. Another block is give people the ability to unstake their coin. Another block is set the monetary policy. Ethereum is an incomplete crypto network. It's a work in progress. And so the problem fundamentally is it's a security, which means to promote a security is securities fraud. It's that simple, right? When you're promoting Ethereum, you're promoting Joe Lubin and Vitalik's company, and it's their token. There was a pre-mine, there's an ICO, they changed the monetary policy, and they currently are holding $20 billion worth of their investors' assets hostage. And we don't know when the money will be released. So here's the issue. At some point, the SEC is going to deem them a security. If they are a security, it's illegal to trade them on any exchange, in the US, really in the world, right? I mean, and unless someone creates a path to register a digital security. Look, I would have nothing against Ethereum if they said, look, we're a company, this is a security, we're going to register it. Okay, what's the board of directors? Who owns it? What's the rules? Give us all the risk factors.
The U.S. Congress is gearing up to critically create regulatory guidelines and appropriate constitutional provisions for cryptocurrencies. In line with this, key actors in the regulatory sector were called to testify before the House committee. Gary Gensler, who heads the SEC, has said his agency is not only ready to go after cryptocurrencies within the United States borders, but even go as far as enforcing regulations on crypto companies overseas. Mr. Gensler is asking for more funding for his agency to make it possible for them to crack down on cryptocurrencies not complying with its guidelines. If this happens, Ethereum would likely be affected. In this interview, Michael Saylor echoes the extreme likelihood that Ethereum is going to fall under the sledgehammer of the SEC. Gary Gensler says the SEC is not waiting for new laws from Congress. He claims they have all it takes and there is no need to redefine the regulations. If this is acknowledged, then this could mean revisiting the previous issues Ethereum had with the SEC at the time of its merge. Back in September, when the SEC declared it was taking over control of regulating Ethereum, the price of Ethereum tokens plummeted by 20%. This came at the back of the cryptocurrency moving from its proof-of-work protocol to a proof-of-stake protocol, which would allow holders of the cryptocurrency to stake their tokens for marginal returns on their staked tokens. This prompted the Securities and Exchange Commission to suggest that the cryptocurrency is tending towards being considered a security that should be regulated as such. As reported by the Wall Street Journal, Gary Gensler, the SEC's director, referred to Ethereum's staking rewards and said, quote, "From the coin's perspective, that's another indicator that under the Howey test, the investing public anticipates profit based on the efforts of others." End quote. Michael Saylor has more to say about his skepticism, so let's go back to him.
A very simple question. Do you know who's going to make the decision to give the $20 billion of ETH back? Because there is no representation as to when you'll be able to unstake ETH. It's not clear who makes the decision. Is it one? What happens if that one person disappears? What if they decide to never give you your ETH back? Okay, that is a problem. So as a publicly traded company, I'm going to make a technical argument. Publicly traded companies can't hold more than 40% of their balance sheet in a security. Like if it was Apple stock and it had 100,000 pages of disclosures, I still couldn't hold more than 40% of my balance sheet in it because, an operating company can't hold any more securities without becoming an SEC 40 reporting company. It's a totally different thing. So technically, we couldn't buy securities if we wanted to. And otherwise, look, Bitcoin's protocol has been pretty much set in stone with a series of only soft forks for 13 and a half, 14 years. Ethereum changes every 6 months. And so it's a different thing. As for back testing it, I mean, I could go back and say, what if I had bought such and such yo-yo coin token too? But as I've said, there are 22,000 tokens. Nearly all of them are unregistered securities, which means they're trading illegally, unethically on illegal exchanges. What could go wrong? Like, I wouldn't put a penny into any of those tokens. If you said, my cousin Vinny's, got yo-yo dying, and do you want to buy some of the penny stock and just trust me? I was like, no. I mean, it's no different than Boiler Room, right? Or, the Wolf of Wall Street, right? The Ethereum people have an aggressive technical ambition, but ultimately it's not a complete project. They've got a 10-year roadmap. When it's complete, 5 years after that, you'll know if it breaks or doesn't break. And at some point, there's the question of, is it decentralized or not? It's pretty obviously not decentralized when you're waiting for the supreme leader to give you the plan.
Michael Saylor points out an issue we should really be questioning. Is there any definite answer to when those who have staked their Ethereum tokens will be able to withdraw their token? There are just too many controversies on this matter, and it seems people are not asking enough questions. Ethereum's transition to proof-of-work protocol means those who own Ethereum tokens can lock them away for a while as staked funds, which would yield dividends to the investor. The minimum stackable volume is 32 Ethereum tokens. Millions of people have already staked their tokens amounting to billions of dollars, which Michael puts at $20 billion worth of Ethereum tokens. Among the current staking pools are Lido, Rockpool, and Stakewise. To activate a validator client, users must reach the 32 ETH threshold by pooling their funds. However, almost 2 months have passed since the merge, and the crypto community has still not received any answers. When will users be able to withdraw their staked ETH? As a result of the Ethereum Foundation's official website removing all definitive timelines, similar questions were raised on Twitter. Before the merge was implemented, staked ETH withdrawals were scheduled to open between 6 and 12 months after the Ethereum mainnet merged with the Beacon chain. The Ethereum Foundation's official website previously displayed this information, but it's now been suspiciously removed. Does this mean they are avoiding giving a commitment? If yes, then what's going on? Why are they being shifty with the stakers? An update that would enable withdrawal of staked Ethereum, named the Shanghai upgrade, has suffered several setbacks and the release date keeps changing. This does not inspire confidence, and Michael Saylor thinks everyone should be questioning this. Several protests have been made, especially on Twitter, about this problem. This issue is worth further research, and we will be doing exactly that. So, subscribe to the channel so you don't miss it. Adios, and thanks for watching.